Webull isn't my primary brokerage, but I do have an account and I think a lot of their community features are interesting. They oftentimes put out posts based off community activity, and I saw a recent post called the top 10 stocks users added to their watch list. The watch list is just that, a list of stocks that people are watching. This is my watch list on Webull, and it doesn't show what positions I have, just stocks I'm tracking. Although I found it interesting what the average person was taking a look at. Webull is pretty huge and primarily targeted at individual investors, not institutional. I found it fascinating to see what the average individual investor was tracking, what they were interested in. And here they are, the top 10. One thing that amazed me is out of the top 10, 6 of them are electric car companies. Of the top 5, 4 of them were electric car companies. Looking at the stock prices of these companies, it's shocking to see the dramatic upswings and downswings each of these have had. In order on the list, we have NIO, Tesla, Nikola Corporation, Workhorse, Ayro, and Electra Meccanica. There's a lot going on with these stocks, and I think most of these are worth having their own videos about. I'll try to release a series for each of these individually and go into more detail. But for quick summaries, Nikola Corporation hasn't sold a single vehicle yet. They also completely lack in earnings per share. But if we look at their chart, we can see they've absolutely skyrocketed from their IPO price. NIO Incorporated actually does have vehicles for sale, but only in China. They delivered around 20,000 units in 2019. Interestingly, in 2019, they received a lot of money from the Chinese government. But again, they're not a profitable company. They have a negative earnings per share. However, they have been around for a while and are producing something. Although, still, you can see their stock price skyrocket. Workhorse has been delivering vehicles for a little while now, and they're not necessarily consumer vehicles. They're more designed for final end deliveries. So if you imagine after large shipments on semi-trucks, the smaller trucks that go around and deliver packages. However, the company has consistently been losing money, and they've been diluting shares to gain capital. As you can see, they have a negative earnings per share. If you look at the chart, they've absolutely exploded and already dipped down a little. Although they could potentially win big with the USPS contract. Again, to show you their vehicles, they aren't producing commercial cars like Tesla exactly. They're trying to fit into their own market, which is rather large and does have the potential to be disrupted. But again, they're currently not making profit and kind of hedging themselves on a contract with USPS. Ayro, maybe it's Ayro, like the general from The Last Airbender. They produce small electric utility vehicles. They don't really have a lot of info about their deliveries or possible earnings, but we can look at some of their smaller vehicles. Three-wheelers, as well as a mini truck. Again, this company doesn't have any earnings per share details, and if we look at a chart, they've had a huge skyrocket in value and a correction already. Yahoo claims they have 15 full-time employees. Looking on their LinkedIn, they said 16, so maybe they hired another full-time engineer. But they are a relatively small company. It's a similar story with, well, let's just call them Solo. That's their ticker symbol. They have a negative earnings per share, and when you look at the charts, we see a huge bump up and then a correction already. A similar story to the other EV manufacturers we saw. These companies either have negative EPS data or they don't have any EPS data. A lot of them are very small and some of them aren't even delivering vehicles. Tesla is obviously Tesla. I'm sure everyone here has heard of them. Honestly, I find a lot of this really concerning. It seems like the average individual investor saw Tesla skyrocket, so they decided to dump tons of money into electric vehicle startups. I don't really think that's the best idea for a couple of reasons. First off, the hype. Tons of articles and videos are coming out talking about all of these companies. There's hype surrounding them, and they've amassed insane amounts of capital in a very short period of time. I'm talking market caps going up by millions within weeks. I think there needs to be a bit of a reality check. Just because Tesla has been successful does not mean other companies will be successful just because they're planning to sell electric cars. First off, I'm not going to say that Tesla's current valuation is reasonable, but they aren't the most valuable auto manufacturer because they make electric cars. They're valuable because they're working on technology that could completely change the future of the world economy. Things like self-driving and their massive data advantage, the telemetry they build into their vehicles. I talk about this in a previous video I made. I'll link it in the description since I don't want to repeat all of that. But if Tesla was just producing electric vehicles, they would not have the market cap they currently do. Leadership is everything in a company. It's definitely worth taking a look at this video about the history of Faraday Future. It's an interesting story of how a company with insane amounts of investment capital absolutely collapsed and never sold a single EV in the US. A company needs direction, and they need to hire the right people. If you have a solid leader with a clear vision, it's likely the company will find some form of success. Remember, Tesla wasn't actually started by Elon Musk. Martin and Mark over here started Tesla, and neither of them currently work at the company. The two founders of Tesla were inspired to start the company after the EV1 scandal General Motors was involved in. They saw a lot of potential in electric vehicles. If you're interested in this bit of drama about the EV1, there's a documentary called Who Killed the Electric Car? Perhaps it's a bit biased, but it's an interesting perspective nonetheless, and I believe you can find it for completely free on YouTube. Elon Musk was one of the first major investors in Tesla. He dumped millions and millions of dollars into the company. Elon was very involved in the initial Roadster design, but not a major player when it came to the standard day-to-day of the company. Musk detailed a plan for growth, which would end with affordable mass-market electric cars, but not start with them. He was also able to secure millions and millions of dollars of additional venture capital from other investors. It's hard to get an exact timeline and details about what happened internally at Tesla. There's a lot of he said, she said, and a few sources of solid evidence, but from the lawsuits and public comments, it seems like this is what happened. Elon invested a huge amount of time and money into the company, and the two co-founders essentially squandered it and did not meet expectations. The company was slowly failing, so Elon took over. Elon forcefully removed Martin and possibly Mark and assumed control of the company, making it what it is today. Now, it may sound mean, and there might be disagreements on whether Mark leaving was forceful or not, but it does beg the question. Had Elon not been involved, would Tesla have succeeded? Probably not. Elon, for as much as he's memed, is a ruthless businessman who really knows what he's doing. So why am I talking about this? Startups with huge venture capital investment are a dime a dozen. Really, they're very common, but succeeding is rare. If any of these companies are failing, will there be anyone to stage a hostile takeover and sort them out? Or will investors pull out and the company will fall to irrelevance? I understand that electric vehicles are exciting because it marks a major transition in technology, where a startup could potentially break into the market. But the vehicle market is very difficult to get into. To put things into perspective on how impressive Tesla's growth was, when Tesla launched their IPO in 2010, they were the first American car company to do so since Ford in 1956. That's insane. 54 years, over half a century, and not a single company in America became a publicly traded car company other than Tesla. That alone should tell you the history of vehicle startups in the US. The resources Tesla needed for their initial vehicles were just not available at the cost and quantities required for a production vehicle. One of the reasons Tesla is so vertically integrated is because they had to be. No companies were selling what they needed at the scale that they needed. In all honesty, it's likely harder for a startup to break into the electric vehicle market than the internal combustion engine market. An electric vehicle lacks a lot of the complexity compared to an internal combustion vehicle, but it also requires things that can't just be bought in massive quantities. Making a prototype is easy, but having a production facility, making a factory, producing something on a scale and having demand for it, that's the hard part. Really, I think the most realistic case for a lot of these companies is being acquired. A lot of traditional auto manufacturers don't actually want to design their own electric vehicles. Look at Ford partnering with Rivian, or GM contracting LG to design and fabricate the components for their electric cars. Let me clarify. I'm not saying you can't make money on these stocks or that none of these companies will succeed, but realize these are purely speculative investments that carry an extreme risk. The fundamentals for these companies are an absolute joke, and you're betting 100% on the future. Yes, you could have bought low and sold high, even if you don't believe in a company long term or played options, but when you're doing that, you're introducing yourself to extreme risk. You're essentially playing musical chairs with your money, trying to get your seat before everyone else does. Understand the risk and the likelihood that a lot of these companies aren't likely to go anywhere.